We've recently received Australia's report card for the December quarter. I'm going to take you through some of the key results, what's driving those, and talk about the outlook for 2020, as well as the implications for policy. Obviously, the December quarter national accounts is prior to the outbreak of COVID-19, so you could say it's a little dated. But I think it's very important to understand the starting point for the Australian economy to get a sense of how we might respond to the challenges ahead. So in the December quarter, the Australian economy grew by 0.5% and growth for the year was 2.2%. To put that in context, growth is stuck below trend. Trend is around 2.7%. Population is 1.5%, so on a per capita basis, growth remains fairly subdued at 0.7%. When we dig into the detail, we find again some disappointing results. Domestic demand or spending was basically flat in the quarter. So too private demand, which is not only flat in the quarter, but it's been flatlining since the middle of 2018. So what we're seeing is that home building activity is still falling, business investment is contracting, and consumer spending is sluggish. The only thing that was driving growth in the December quarter was a run-up in inventories and also the real estate sector, together adding 0.4. So overall, the detail is quite soggy. So what's driving these results? Well, we've talked about this many times before in terms of three powerful headwinds impacting the Australian economy. Firstly, weakness in productivity and wages growth, which is constraining consumers. Secondly, a cyclical, so a temporary downturn in home building activity, but that still has some way to go. And also a challenging global backdrop. And all of this has led to an evaporation of both business and consumer confidence. So there's really a lack of momentum as we head into 2020. Obviously for this year, 2020, the big story is around the disruptions from the COVID-19 outbreak. Certainly in the Q1 and Q2, we expect to see conditions disrupted in the Australian economy, and perhaps in the second half of the year, as conditions return to normal, we'll see activity bounce. But overall, the risk is that growth is weaker in 2020 than 2019, despite policy stimulus. Just running through some of the key dates. Obviously, the outbreak in the March quarter in China, our number one trading partner. On February 2, the Prime Minister closing the border to flights from China for non-residents. And then just now, as we're in March, we're seeing the virus go global. And we're just starting to see the outbreaks pick up here in Australia, which will lead to a lot of disruptions in the June quarter. The main approach to the virus has really been around containment. So what that leads to is shutdowns and cancellations, which is both a supply and demand shock. It's going to continue to weigh on confidence. Obviously, you'll see significant policy response. The Reserve Bank cut interest rates in March. We expect a follow-up cut in April and further stimulus beyond that. And the federal government, which has been responding to the bushfires in a modest way, will now start to ramp up and have a bigger stimulus package, possibly in the tens of billions of dollars, and be looking for the state governments to act as well, possibly providing some tax relief for companies. So plenty of policy response, but when you're dealing with shutdowns and cancellations and a shock to confidence, it's questionable in terms of the impact. Really what you need to see is that the virus being contained and then activity can start to return to normal. So a very challenging year ahead. Thank you.